Alright, good afternoon everyone. I'm going to do a follow-up video on the one that I did yesterday. I was talking about, I did an intraday video yesterday and I was talking about how we had a bounce yesterday, follow up the 2 days that we had a pullback. Now this is a 2-hour chart of the NASDAQ futures, and I'm using NASDAQ futures because today, Friday, we had the report of the job. How many jobs were created? Now the weekly job report. The interesting part was the futures traded. The futures for the indices traded until 9:15 this morning, and the jobs report came out like around 8:30, I believe. So I wanted to show you what happened this morning after the report came out. And the last thing I had talked about yesterday was that we had broken down technically for the shorter term, and that yesterday it looked like we have bounced, but this bounce was it wasn't supported because in the I should say in the internals you didn't see any follow through from the volume or the actual companies, the ratio of companies that were moving up compared to the ratio of companies moving down. So let me go ahead and zoom in, and this is the once the market closed yesterday, and we're going to go ahead and do travel through time through the night the other way. So this is throughout the night and this morning. Voila. So this is around 8 o'clock this morning, 7, and then followed through um, the job reports at 8:30 when the whole waterfall happened. So this was um, during the closing hours of the regular market. So we have to see what happens next week. But this is the interesting part about it, that this top line and the bottom line, these parallel lines I have drawn here, are from the high and lows from last week. What does that mean? That this week we have taken out the highs and the low from the previous week. And what is that? Let's go to a weekly and zoom in. This is a weekly chart. What does that give us? Anyone? Okay, we actually have a engulfing pattern on the weekly. These engulfing patterns are very strong patterns, especially since we haven't one at the top of an uptrend. Um, these tend to be reversal. Uh, Also, you have we are so extended from the moving averages, so we have to come back to the medium of the moving average to kind of have a little bit of a breather before we continue to higher prices. So let's look at what happened to the S&P futures, and let's look at the 30-minute chart overnight, and then right um, at 8:30. Look at what happened. Just waterfall, complete waterfall. So again, let's look at the weekly. On the weekly, for the S&P 500 futures, you're looking at more of a ascending bearish ascending triangle wedge, and this tend to be once they break down, they do a retracement to 50% retracement. So if let's look at what happens when we do a Fibonacci retracement, what would take us to the 50% right over here, which it'll take us around the 34 moving average, somewhere around there. So yeah, I do see it happening, but since this move has been so strong, and things aside from the jobs report this week, everything, all the reports have been coming out stronger. I don't know if we are going to head down to a 50% retracement. Another thing is another thing to consider is that this pullback is happening uh, uh, after the first week of April, and you know what happens in May. Um, Sell in May and go away. I don't know if that's gonna be something that's gonna happen this summer or this year, but we'll just have to see. Um, I do want to show you what some of the engulfing patterns that has happened the past few um, uh, couple years, and this is also on the weekly. This is the S&P 500 cash, and let's go ahead and zoom in right over here. You have, this is in April of 2011, and at the end of April, look at this. This is perfect because it shows what happened when you starting to have a pullback in April to right before um, the May sell-off. So you have quite a few weeks of choppiness and selling and distribution before they decided to go ahead and buy it again. But over here you can see the engulfing pattern for a reversal, an engulfing pattern which engulfs at the bottom, and the new uptrend begins. Okay, we'll also see that happening at the top right over here, where you have a again in 2011. The other one, the previous one, was 2010. This is 2011 right here, and again at the end of April and beginning of May, where you have the selling May and go away, there's that the engulfing pattern again on the weekly, and followed by weeks of distribution and selling, and then last year obviously we had that horrendous sell-off towards June, July, and August. But to the contrary, you have the engulfing patterns from our last from the beginning of the this rally that we just had. Um, so you had the double, which I talked about back in November, that we had a double engulfing pattern on the weekly. The first one back in November, and the next one in the middle of December. So finally, let's look at what's going on with the Russell 2000. And the Russell 2000 is interesting because it is a little different of a pattern than the Nasdaq and the S&P. And I had talked about this because it seemed like we were breaking out from this downtrend line on the weekly, on the longer term downtrend, but it was a fake breakout, which means that it didn't support the price, neither the volume, and then this week followed through with definitely quite a bit of a sell-off, and obviously this week, this is the futures, so this candle was finished off this today by the sell-off this morning. That 45 minutes of selling, which took the market down, or the futures for the Russell 2000 took it down 1% and 1.75%, almost 1.75%. So that was quite of heavy selling in the futures, and I do believe that we will have an interesting start for the week next week, seeing the futures acting like this. Let's look at what should we be expecting for the targets, and the S&P. Let's look at the Russell 2000. The ETF for the Russell 2000 is the IWM, and the WM, I do see it going to the 38% retracement at least on the weekly, um, which is also met with the 34-day moving average. So at least going, you'll be looking at around 8% sell-off or pullback. Let's look at the Qs. Same thing with the Qs. Even though the Qs are the strongest, they also tend to be very volatile. So meaning that because of what's they had the strongest move to the upside. You know how they say that the bigger you are, the stronger you fall, or the fastest you fall. This may be happening here in the Nasdaq, but I do to have a perspective. Let's just continue with 38% retracement, and it will take us to 62.56, which it'll still be somewhere around 8%, 10% retracement from the highs of the Qs. And finally, let's look at the SPYs, which is the ETF for the S&P 500. Let me go ahead and clear some of this stuff out so you can actually see. The S&P 500 on the SPYs, I do see it going to the either 38% retracement or 50% retracement. On the 50% retracement for the SPYs, you do see a little bit pretty big support if you do a drawing right there. See, it's pretty much the same support where before was support. Before was resistance, now support, and once we start heading to that towards those levels, this 34-day moving average will flatten out, and it also will coincide with this 50% retracement. So that's a pretty good target for the SPYs. 129 from the 142, so in about 10% more or less. Alright, so until next time, I hope you are able to follow this, and see you next week. Happy Easter, everyone. Thank you for listening. This is directionalanalysis.com.